Mr. Vivek Barchha. First of all, welcome to the podcast.
Thank you for having me, Sannidhya.
Last time we had a talk about this like a couple of weeks back. I have been waiting for this podcast so eagerly that I couldn't even, express it. So first of all, keeping everything aside, how are you doing, man?
I'm doing great, Sannidhya. By the grace of God, I'm not detected of COVID in any of the waves, and I'm very grateful for that. Yeah, so I'm doing good.
So let's begin this informative podcast. I've arranged some points accordingly for this podcast. Firstly, we'll be talking about the people, the students, especially I would say, who have just started earning some side income from their side hustle or are getting a huge amount from their parents as their pocket money and they want to invest their money. Secondly, we'll be talking about the ones who have just started earning, like they have got a job and they want to start investing. And lastly, we'll be talking about the ones who are in their 30s and 40s and are planning to versatile their portfolio. Okay?
Yeah, that's a great timeline to start to talk about, I would say.
So let's again keep everything aside. We have been talking for like couple of weeks, as I said. I know you so well, you know me so well. But just for our audience, tell me who is Vivek Barchha?
Okay, so I recently completed my BCom from Ahmedabad University with specialization in banking, finance and insurance and taxation. I've completed my schooling from Rajkot as well as Pune. So I've been exposed to different kind of mindsets that come to the financial market. And I am also a very enthusiastic learner about behavioral finance. I am a CFP and I'm practicing it also. Plus I'm currently pursuing a course, a postgraduate course from IMI Kolkata and NSC Academy Mumbai.
I guess I'm talking to the right person about money. Now talking about first question, talking about portfolio building, the trend of investment is going up, like it's booming. And especially, you can see these trends among youngsters. A bubble has been created from couple of years, and new youngsters are getting added into this bubble. But I just wanted to know that why is this trend created? Like each and every day, new youngsters are getting added to this bubble. I know it's good for the economy, it's good to boom our economy, but I just wanted to know the reason that why new people, new youngsters are getting added into this trend. And secondly, for the ones who have not started investing, who are not into this trend, what's the need of investment? Why should they start investing, like according to you?
Okay, so I would start by saying that who does not want money, right? So of course I would talk about the role of Bollywood coming in, the role of the cryptocurrency market coming in, and also the role of venturing out into different investment strategies, and also the financial education that is being imparted by the society and that is growing. I don't only mean Harshad Mehta scam. Yes, scam 1992 has played a vital role, which I believe is true, and that has attracted many young people to invest into stock markets and other investments. I would also say that some movies like Bazaar or Guru, or I would say the Big Bull that has recently come up. So I would say that those movies have also inspired many youngsters to invest in the stock market. Also, the investment education that is being imparted by the society is growing multifolds. So that is the reason why young people are getting into investments. And I would not say it's a bubble, because in the finance lingo, bubble is a very dangerous word to talk about, so it would scare many of the viewers that we have. Yeah.
What's the need of investment for the ones who have not those who are not investing?
Yeah, that's the very first question which has to come to your mind when you start investing, that why am I investing or why should I invest? So yeah, talking about that is that the inflation. The inflation rate in the economy is at 6%, I would say, nearly to 5.5 to 6%, and the investments that are available in the market, or just by saving the money in your savings bank account, not investing into anything and just saving the money into and keeping the money into your savings bank account, that would yield you an interest of, let's say, 3 to 3.5% max, right? So if your money is devaluing itself by 6% and your money is growing by 2 to 3% every year, so if you calculate the real interest that you are fetching is minus 4%, so I would say that you are giving the bank money to keep your own money. So that's what people need to understand, that just by saving your money, you don't solve all your problems. You don't make money by saving your money. You make money by investing it. And how? Investing it smartly so that it beats the benchmark inflation rate. It has to go above this stage, above 6%, to make money. So that's where you are actually making money. So yeah, this is why you should start investing.
So now it's clear for me कि boss मेरे को investment तो करना ही है. But now I'm in my 20s and I don't have proper knowledge about where to invest, how to plan my money. I have little amount of money that that my parents are sending me, or I am earning from some internship or side hustle. But I don't have any plan to manage that money. So how must I plan my investments, my expenses and my savings in order to gain a good portfolio and build some money out of it?
Okay, sure. That's a very interesting question to answer. See, we understood that what's the need of investment. कि बॉस अगर आपका पैसा 6% से घट रहा है और 3% से बढ़ रहा है तो आप पैसा नहीं बना रहे हो. Let's get this straight. Okay, so that's where the need of investing comes in. Number 2, if you are earning something, you would probably save it. कि हाँ, मतलब you would have some goals, or you would save for something else. So we just discussed that saving is not enough, number 1. Okay, I would also suggest many of my viewers who are especially the ones who are in their 20s, in their early 20s, to look at aggressive investment options, because that's where the money is created. The real money is created there. पैसा बनेगा, पैसा बनते दिखेगा उधर आप.
Because there is nothing to lose.
Yeah, because there's nothing to lose. Your father, I'm sure your father would not ask you if he would be giving you money, pocket money. He would not be asking you to support the family or to bear any household expenses or something. So you don't have any financial liability as of now. Correct. So your risk appetite is at the maximum. ठीक है, तो अगर उतना रिस्क है तो यूटिलाइज करो, यूटिलाइज दैट रिस्क. ठीक है. सो एवरी पर्सन, every student, every college going student should start an investment at a very young stage. Probably 20 would be the right age to start, I would say.
So as we have discussed about this thing, that the trend has started to invest in stocks, in cryptos, in mutual funds and other all things that are existing around there. And more and more people are getting attracted towards that green number, that profit number in your portfolio. So this temptation has made people invest without even having proper knowledge about the market and how the market goes, how the market runs, what are the political things that matter in the market, etc., etc. So like we discussed on the other day that about the budget that is going to come. We made a proper estimated path that the market may follow. Now it may follow it, but it may follow its like if and else. But we did discuss the proper path, we did our research and we were planning our investments accordingly. But the millennials in this generation, they are just going around the trend and they are not following the proper knowledge that they should have. So to avoid the lack of knowledge, what are the sources to learn the importance of investing, to learn the importance of knowledge the market has to give you, and for the ones who are just entering into this field, and what mistakes can be avoided for them?
That's also a very important question. I would say that yeah, market is market. You cannot predict it. No one can make a proper path, or I would say that yes, they can make a estimated path, but they would never, the market would never react as they want it to react. Okay, so market is market. You cannot control it, you cannot predict it, you cannot judge it. Number one. Number two, there will be certain shortcomings that would come, but if you are invested for a long period, you would make money. अगर बाजार देखिए, आखिर में वो मैराथन रनर का नाम ही याद रखता है, करेक्ट, क्योंकि लंबे टाइम पे ही पैसा बनेगा. 100 मीटर रेस भाग के कोई फ़ायदा नहीं है ऐसा मैं नहीं बोलूँगा, बट what we fail to understand is that Usain Bolt had trained for 20 years just to win all the gold medals at 100 meter races. So that's where he created the history. He created the history in 20 years, not in 2 minutes that he ran on the track. वो तो एक स्टेज था उसके लिए, परफॉर्मेंस के लिए, बट वो परफॉर्मेंस की तैयारी तो उसको 20 साल लगे ना उस बात के लिए. So that's where the history was created. Number two, yeah, we did talk about proper knowledge and proper path to invest. So yeah, it's very important to know that what you are doing. Just following the trend does not suffice. Okay, so you need to learn how the market works. You need to see that what is good for me and what is good for my friend. If today let's say that you are investing into a share, मेरे को बस इन्वेस्ट करना है, कहाँ करना है, क्या करना है, I don't know. That's not the right way I would say to invest. Because अगर तू वो शेयर ले रहा है, तूने कुछ सोचा होगा, हो सकता है तेरा गोल अलग हो, मेरा गोल अलग हो. I want to create my money in other way, you want to create it in other way. So knowing the right path, knowing the right consequences, knowing the right kind of knowledge that you gain is very important before starting investments. Yeah, but shortcomings आते रहेगा, budget आते रहेगा, कोविड आते रहेगा, पेंडेमिक आएगा, थर्ड वेव, फोर्थ वेव आएगा, निफ्टी गिरेगा, सेंसेक्स गिरेगा, डिप्स आएंगे, बाय द डिप्स के ललकार भी आएंगे. बट एक जो होता है ना कि घोड़े की नाल लगा के चलना है, तब जाके पैसा बनेगा.
We have also heard that you have some course on this, so let us know more about it.
Yeah, I have designed a course which is targeted to the teenage audience only, from 15 to 19. So it basically talks about certain rules that you must follow while knowing your finance, like tracking your expenses is very important. Distinguishing between your needs and wants is very important. You also need to see that where can you cut your expenses. कि अगर आप एक महीने में 4 बार बाहर जा रहे हो, can you live without it? Yes, of course. Can you do it 2-3 times a month? Yes, of course. तो जो एक महीने का जो एक टाइम का जो 1000 रुपये 2000 रुपये का जो पैसा बनेगा, वो every month if you start investing that small amount of money, वो छोटी अमाउंट आपको फ्यूचर में इट वुड गिव यू मल्टीफोल्ड रिटर्न्स and it would actually be very much beneficial to you. So it talks about that. It talks about delayed gratification, which is also a very unique concept. I would say that every millennial should know about that.
Okay, so let's talk about Indian mentality system. Now, I've seen this mentality amongst many Indians that they're afraid to take loans. Now, I don't know the reason behind it. I know, but I probably won't speak about it. I want to hear it from you. Even if it's helping them to grow their business, their financial stability, they don't want to be under this pressure. This is the same thing that we see with credit card systems. Now the millennials, they are afraid to take credit cards, they are afraid to adopt them. Instead, I believe that if used in a proper way, credit cards can be used as a weapon to build financial stability. So is the risk factor the only factor that comes into the play, or there are some other factors as well to take into the consideration?
Okay, so first of all I would say that it's a myth in nowadays that people are afraid to take up loans. People do take loans, and yes, loans has its own benefit, coming to income tax, coming to valuations of a company and many more. So yeah, it has its own benefits also, and I would say that it's a myth in nowadays that people are afraid to take up loans. People were afraid to take up loans because there is some uncertainty, but people who run MSMEs, and generally in these times, in the time of crisis, they are afraid of the fact that will their business run properly or not. So they are of course afraid to take up loans, but overall I would say that it's a myth that people don't take up loans. Yeah, earlier that was the case, that a certain type of financial pressure is getting created while taking up loans, while taking up huge loans, and there's some uncertainty because of the agrarian economy that India was into. But I would say that no, people do take up loans nowadays. And yes, coming to credit cards, credit card is a very powerful weapon in the hands of people for personal finance, I would say, because using it in a correct way, using credit card in a correct way is a very unique solution to your portfolio, your personal finance portfolio. It's a brahmastra, I would say. So yeah, so basically a credit card, how a credit card works is that when you get to spend the money before you have it. That's basically what a credit card is. Ki spend now, pay later. Okay. So now what happens is, after the credit cycle, after the end of the credit cycle, which is generally 45 to 52 days, you get the bill and you need to pay for the expenses you have made in that period, in the period of 45 to 52 days. So by paying those bills, you are building your credit score. You are proving your payback mechanism, how effective your payback mechanism is.
Just a minute, sorry to interrupt. Let our audience know about what you mean by credit score. So please elaborate this credit score term.
Credit score is basically a score which rating agencies like CIBIL give you on a personal basis, that how effective your payback mechanism is. When you are taking something on credit, जब आप पैसा किसी से उधार लेते हो तो उसको कितना इफेक्टिवली आप वापस चुका पा रहे हो, how effective you are able to meet those liabilities of yours is based on the CIBIL score or the credit score given by CIBIL. CIBIL is a rating firm, so that is what credit score means. So yeah, you are building your credit score by paying all those credit card bills, and that credit score proves how effective your payback mechanism is. And so whenever in future, if needed, you go to a bank to take up a loan, So they would surely check the credit score, and if it's on the higher end, you might get at a very cheap rate. You might get the loan at a very cheap interest rate because it's very effective, because the bank judges you that yes, you are effectively able to pay the credit, the borrowing that you have taken from anyone, so we can trust you. So that's what a credit score is, and that's what a credit score would do for you. And eventually, by using credit cards, you can make your credit score run fast for you. Yeah.
Great, great. As we have been talking about taking risks, there are various investment options around there, and we have discussed it before. But some of the options we have not discussed till now. We have discussed about stocks, but people don't know other investment options like real estate, gold, mutual funds, FDs. Let's keep FDs aside because I have another question for FDs. I want to talk about it in later part. So how good do you think that these options are, like stocks, real estate, gold and mutual funds, when we see that number percentage game coming into the picture?
Okay. So number one thing that I would like to say about all the investment options is that these are different asset classes. Real estate, gold comes under commodities, stocks. So equity, debt, gold, real estate, and alternative investments. These are the asset classes which are generally into discussions. So number one thing that a millennial should look at is option which they understand, an option which is aggressive because of the risk appetite. कि बॉस अगर पचाने की शक्ति है तो पचाओ, करेक्ट. तो so talking about gold is a very safe haven asset in India. It's seen as a very safe haven asset कि ठीक है, गोल्ड खरीद लो, गोल्ड का भाव नहीं गिरेगा, गोल्ड चलेगा, गोल्ड बढ़ेगा. So it's very safe to have gold in your portfolio. But again, you are not taking up the risk because it's safe. And some kind of risk is necessary at every stage. I'm not saying that gold is a very bad investment option. It's a very good investment option when combined with different asset classes in order to make a proper portfolio out of it. So yeah, moving from gold, talking about real estates. Yes, real estates are also a very good investment option, but directly venturing out into real estates is very tedious, very tiresome, and I would say not possible for millennials to go out right now because it requires a very high ticket size for buying a flat in Mumbai or buying even a small piece of land in cities like Mumbai and Delhi. It would require a very huge amount of money. So, and that kind of money is not with any millennial, I would say. So it's number one, it requires very high ticket size. Number two, it's a bit illiquid option when compared to other options. When compared to equities and debt, it's a bit illiquid option. So if you go out to sell your house, would you get the money tomorrow? If let's say I decide to sell my house today, would I get the money tomorrow? No, right? So that's what basically is illiquid.
Okay. So basically what my belief is that real estate was a good option before demonetization, like 2016. मेरे पापा, like my father, he says this every time, like एक time था जब double होते थे पैसे real estate में, but that's not the situation right now after 2016, right?